Yeah, super excited to be here on Expo Real. Also with Sylvia,
Hello.
who is head of the membership of the Senior Housing and Healthcare Association. And we would like to give a brief introduction on our association because I think senior housing and healthcare real estate is maybe the main investing asset class. It's about impact investing, ESG. So it's really time to shine. We founded this association in the beginning of 2020. And we have a quite clear purpose, because the purpose is to help to create a mature investment market in Europe. And I see a lot of emerging markets, for example, regions like Baltics, CEE, who needs actually some knowledge transfer. So one of the purposes of the SHA is to gain insights and to help other countries to create an investable market, both on the operator side and the investor side. Because that's quite unique. This association is driven by industry leaders, both from the investor side and the operator side. And I'm really proud to be the chairman of this association. In terms of goals, I think the multi-stakeholder platform and especially inspiration and knowledge, that's really keen because best practices, it's something we would like to share. When we are, for example, in senior housing, we would like to see best practices in nursing homes and exchange because it's really about aging demographics, and we are really searching for what are the state-of-the-art facilities, for example, in France, or what can we learn from the UK market. So that's really the key element of the association. Maybe a question to you, Sylvia, because you're a great member of the team. Why are we maybe the most impactful association?
Well, first of all, you mentioned multi-stakeholder, but what is important that among our members we have a representation from different countries that is active on pan-European markets. And what is important for this market is that it's operators driven, so it's a little bit different to maybe other asset classes on the real estate market. And second thing is that we already know from other sessions that we held previously online that there is no one strategy that fits all markets. That's why this exchanging the knowledge, benchmarking and insights are very important to understand how to enter each of the country in Europe.
Yeah, I totally agree. When you look at our members, both from assets under management, but also the geographical presence, we have a, let's call it European spread, and we're also getting questions now from US capital, but also from Asian markets, for example. What can we learn from each other? And mostly impact topic is really top of mind. And I think senior housing and healthcare real estate is really an outperformer on the social aspect of ESG. And that really makes impact. And I think all our members are driven to improve lives of both care workers, but also residents. So that's really in terms of alignment, why we are one family on the SHA. Yeah, and I'm really proud also when you look at this screenshot of all our members, and it increases by the day. So also feel free to meet all the members. We see board members of Adifica being present, Frederick also in the panel, and of course Stephen from CBRE. So yeah, really proud, and also to elaborate on this topic. And I think that's a great bridge to the first keynote. And that's Charles-Antoine. You're the Chief Investment Officer of Adifica. One of the, you could call it thought leaders of our association. And you will give a brief keynote on the topic. So the floor is yours, and we'll give the microphone to you, Charles.
Yes, thank you, Ron and Sylvia. I think you have the...
Yeah, you are.
So, hello everyone. I'm Charles-Antoine, Charlie, easier for the friends. I'm going to give you a very brief introduction about Adifica's international expansion journey and try to put some links to the panel discussion afterwards. But as mentioned, I'll try to keep it brief, just to put more emphasis on the panel. So Adifica, for those who don't know us, we are a Belgian REIT, active throughout Europe now in 7 countries. The 7 countries you can see there. But we are a pure play healthcare REIT. We started out in 2006, let's say, as a more residential healthcare REIT, a very small player out of Belgium. But we started growing quite fast, but always based on partnerships with good operators with long-term views. And that's how we started expanding in Belgium. But then we saw potential in other markets, and we decided to go abroad to other countries for multiple reasons, but some of the main reasons were to be able to follow our operating partners in those markets. So we went to Germany, to the Netherlands, and the other markets you can see there. But the other important reason to expand to other markets was also because those partners were on their side also growing quite fastly internationally. We also needed to be able to talk on at the same level with them. So not be stuck in our small country, which was Belgium, but to be able to be international and to offer something more to our operators, let's say. So today, you can see it here, we have a portfolio of almost 4.5 billion euros invested across Europe. And you will see later with what kind of partners we have been doing that. This is a spread also geographically, but not of our existing portfolio, but of the development pipeline that we have committed to. Because next to our existing portfolio of 4.5 billion, we have a quite strong development pipeline of 855 million here that will come in addition to our portfolio in the coming years. And that's also a part of the partnership that we want to offer to our operators and partners, is that we want to be a real estate partner for them. So not just buying real estate and sign a long-term lease with them, but we want to also build new buildings for them. But a big chunk of this committed pipeline is also on existing assets that we want to refurbish, to extend, to improve and make future-proof again. And you can see that it's spread across the three coming years, so it's also equally spread there, coming to our portfolio. Here is what I briefly mentioned. So the Adifica's growth pace starting in 2006 with a very small portfolio. And you can see that in the initial years, well, we were Belgium-based, also legally limited and restricted to staying in Belgium. And then that market opened to go through to other European countries. And you can see that was also a big trigger to accelerate our growth. So you see that in 2013, we went to the German market, 2016 to the Dutch market, and we even accelerated that pace going into the UK and the Nordics more recently. Next to that acceleration of growth throughout Europe was also based on a combination of acquisitions of existing assets, but also on development, as I mentioned, and we also added an M&A strategy. For instance, our entrance in the UK was the acquisition of a large portfolio of €500 million, and our entrance in the Nordics was a takeover of a listed company in Finland. So by combining all these elements in our strategy, we managed to accelerate our growth internationally. This is the evolution of our portfolio. You can see in the beginning we were purely Belgian-based, and then over time you see the diversification kicking in, the geographical diversification, because diversification is very important for us, not only geographically, you will see that later as well, but you can see that at the end of June, Belgium was still the largest country, but if you add our pipeline to that list, you can see that the German market will become the largest country in our portfolio, which isn't really illogical given the size and the potential of the market. I mentioned diversification. We are a pure play healthcare player, but within the healthcare spectrum, we also want to diversify. If you look at our portfolio today, it's still mainly focused on what we call here elderly care homes. You could call them nursing homes, or in some countries assisted living. But we also have senior housing or independent living facilities, combination of both. But then also stepping into new countries, we also see potential for other segments within the healthcare real estate. For instance, in the Nordics, we also invest in children daycare facilities. We also invest in specialist care homes, sometimes also for children. So there's a very broad spectrum there, and also a lot of different asset classes that aren't even present yet in our portfolio, like for instance clinics, rehab clinics, but different kinds of clinics and other types of healthcare. So that's also potential for the future. Another type of diversification is across operators. So we can see here that the main tenants in our portfolio are, well, big names like Corian, Colisée, Orpea, big international players with whom we have grown across countries, let's say. But we also very much like to work with what we call the local heroes, so very strong local operators that have an in-depth knowledge of the local markets, sometimes very locally within a country even. And we also work with very small operators who have proven to us that they have a good track record, good strategy, sound financials, and we don't have actually any issue of working with them. So we don't purely focus on the bigger international players. And doing that, you can see that we have more than 100 operating groups in our portfolio, of which is about 500, almost 550 buildings today. This is another, well, for those who don't know the market very well, one of the main features of healthcare real estate is the very long-term lease agreements. So in our portfolio, we have an average, weighted average of unexpired lease terms of 20 years. Of course, that varies across countries, but it's also a statement towards what is very important in healthcare real estate. It's not to make quick profits, but it's really about this long-term sustainability. And one of the most important things when we acquire or invest in healthcare real estate is that we want to make sure that the rent levels are sustainable for this long term. So that's very important in this sector, certainly if you compare to other sectors. What about future expansion? Well, here is the map where we are already active, as you've seen before. Well, the main drivers for us to look at new countries are always based on those three drivers I put there. So demographic evolution, that's quite clear, I think, across Europe. But then we also want to see the potential for consolidation of the market. So consolidation amongst operators, also amongst real estate players, but mainly operators, because that's necessary to make a market dynamic. And operators who want to consolidate the market, they usually also are looking for real estate partners to team up and to do it together. But then we also want to understand the whole organization of the healthcare system, country by country, and sometimes region by region, and also how the market is being financed. Because this is a very important driver of the healthcare concepts that are possible in a certain country and probably not in another country. So we're always talking about healthcare real estate, sometimes more specifically about nursing homes. The drivers are the same, but they materialize in other forms in different countries because of the specificities of each country and each financing system. And then on top of that, of course, you have also the local specificities, which are, for instance, also tax aspects or cultural aspects, or how the sector is organized in terms of private or non-for-profit or public operators, which drive potential for us to go to new markets. So, well, there's a lot of activity, for instance, in Southern Europe today, a lot of potential when you look at population. Maybe the financing of the system is less clear there, but at least there is a lot of evolution going on also in terms of concepts. So those are interesting markets according to us, but also the other Nordic countries are also very interesting to us. And a few weeks ago, within the SHH Association, there was a very interesting panel about Eastern Europe and Central and Eastern Europe. And there also there could be nice potential for the future, but it's emerging or not even emerging markets. So that's also something nice to analyze for the future. And then, as mentioned by Rob, maybe a few potential discussion points for the panel. Hot topics that I see that are actually, well, hot topics at the moment in the market, but that will probably influence the market and influence valuations also in the market, are market facts like the increasing competition, not only from investors, but also from operators who want to now remain active within the real estate as well, and sometimes even build up whole real estate departments. So that's one evolution. Of course, the yield compression, very hot topic, certainly in Germany. think there to give an impression to people who weren't active in the market since very long in Germany. I think we entered in 2013, and we can say that basically every year the multiples on rent have gone up with one multiple. And so we are now in 2021, going into 22, and I think we're probably not far from there, from that number in the market. But also the yield compression in link with the interest rates, which are evolving as well, and then the expectations of inflation. So that will be an interesting evolution to see in the market. But then you also have very more market parameters that can influence the values, and we have interesting discussions with operators about what type of lease agreement is or should be market standards. We're talking about triple net lease agreement, double nets, single net lease agreements, and should we remain with these very long-term lease agreements of 20, 25, 30 years, or should we make it shorter, but then with what kind of options and for whom? That's always an interesting discussion. And then a big focus on sustainability, energy efficiency, of course, but also from the operator side. How adaptable is a building? How future-proof is it? How can you adapt it also to the future needs of clients? Because the elderly from 20 years ago, they have other needs than the ones from the future. So that's, I think we've seen that also now with COVID, that the buildings which were very well adapted, well, they suffered less than, for instance, in some countries with a lot of double bedrooms, where the concept was probably less adapted than in others. And then the market potential, well, will it go? Well, it will also depend a bit on the openness, let's say open-mindedness from the public sector and non-profit sector to work with the private sector on the investment side, also on the operational side, because there's a big chunk of the market which is still untouched there, or almost untouched there, depending on the country. So that's interesting. I mentioned the other segments, so I think we can now jump into the panel and have this discussion. But
thank you for your keynote. Really impressive growth story. Maybe one question before we're going to the panel. What's, to your opinion, the main driver of your success?
It's difficult to say, but what we try to maintain, at least within Adifica, is this entrepreneurial spirit, and we want to remain, and even within a growing organization that you need to structure, you need to put procedures in place. We try to remain entrepreneurial and to be a problem solver and not create additional problems. So I think that's been perceived also by our partners, operators, as very positive, and sometimes a reason for them to work on, for instance, sale and leaseback transactions with us, even if they know they're not getting the highest price of the market, but they know they have a real estate partner that can think about their real estate on the long term. So.
Well, great. Thank you, Charles-Antoine.
Thank you.
Yeah, we're going to do the expert panel, and maybe you could also sit, maybe the first side. Yeah, we have a really super panel today, and I would like to introduce you, so feel free to have a sit. Because next to Charles-Antoine van Aals, we're having from Corien, Benjamin Baganes. We're having Stephen Miles from CBRE, Frederick Dipp, President of Mosaic Asset Management, Sabine Geus, Principal Real Estate Europe, and last but not least, Nicolai Schmidt from Swiss Life Asset Managers. There is one microphone less, so we have to share it, but let's start with you, because Sabine... No, start with you, Sabine.
Okay.
Yeah, because I think it's very valuable for all the listeners, both online and here in the audience, to have a brief introduction yourself in person, why you're in healthcare, and also a short corporate intro.
Yes, thank you very much. So let's say only women will start, but that's nice. Yeah, happy to be here. My name is Sabine Geus. I have about 20 years experience within the real estate sector and about 10 years within the asset class healthcare. I'm a senior fund manager healthcare at Principal Real Estate, based in Frankfurt. Principal Real Estate Europe is the European arm of the Principal Real Estate as part of the US investment group. And we have about a track record of about 10 years within the asset class healthcare. and we have with a special team based in Frankfurt, only working on the as a healthcare team, and actually we have two Care Invest funds, which is Care Invest One, which is invested in care homes and assisted living, and Care Invest Two, which is still open for investors, looking on care homes, assisted living, medical centers, and also on REA clinics. So I'm happy part of this discussion, and probably
Yeah,
I
great.
will
Maybe Nikolai, brief
give it
introduction
back.
yourself.
Yeah, thanks for the introduction. My name is Nikolai Schmidt. I've been working at Swiss Life Asset Managers since 2015. Started in Luxembourg with a beautiful colleague, which is part of the audience, and moved back to my home country in Germany in 2017. We are investing in healthcare since 2006. We were one of the first asset managers which established an institutional healthcare fund in Germany for institutional clients. And so far we did invest 1.7 billion euros in healthcare, which means assisted living, full inpatient care, and medical office buildings. And one of our slogans is we enable people to lead a self-determined life, which means not only in terms of our investment strategy, but also in the way we support people who are at a later stage of their age to lead an independent life as long as possible.
Great. Frederick?
Hello, Ron. Hello, everybody. I'm Frédéric Dib, founder of Mosaic Asset Management. Mosaic is an asset manager specialized in healthcare. Before doing that, I was an operator, nursing home operator in France, and we had looked also extensively at other European markets. And so currently we manage over 40 assets across 4 countries in Europe, and hoping to expand into also Netherlands and Ireland. Thanks.
Thank you. Stephen?
Hello there. My name is Stephen Miles, CBRE. I work in the
Stephen,
European
bit closer.
Capital Markets team, and I'm covering all the European countries from a team based out of London. I'm focused on operational real estate, so covering from hotels, student housing, healthcare, across those spectrums, and working with a lot of our bigger clients who are moving into those sectors and across the region.
Great. Benjamin?
Hi, everybody. I'm Benjamin Cavenis. I'm the head of real estate at Corian in Germany. I manage 250 assets that we operate in Germany, mainly nursing homes. Out of the 1,000 assets that Corian operates across Europe, we are present in 7 countries. It's roughly 4 billion euros of turnover, and we own, in the meantime, almost 4 billion also of real estate assets. We are at the same time an operator and an investor, and looking for further development. We have a pipeline, a very strong pipeline in nursing home, and I'm very happy to take part to this.
Okay,
panel
great.
today. Thank you.
Yeah, maybe it's also relevant to start with you, because I think we all agree it's operational real estate. And also when there were a few key takeaways during the keynote presentation of Charles-Antoine, you were also highlighting what's happening on the operational side. And maybe, Benjamin, could you give us some insights on the more operational view? What's currently top of mind? Are we still suffering from COVID, or is there scarcity on the care worker side? Could you share some insights, please?
Yes, thank you. Yes, I think we're still suffering from the COVID-19 crisis. We still need some months or maybe some quarters to fully recover out of the weak months we had in the past due to the several waves of COVID infections that dramatically had consequences on our nursing homes. but we are positive because I think we have very nice real estate portfolio. In the meantime, we are improving and innovating a lot, which is a good positive aspect for recruiting staff, which is still our issue. It's nothing new, but it's getting even more challenging due to the crisis that led some people to change, just like in the hospitality sector, their job and look for better living and working conditions. So we need to be more attractive as an employer. So we really invest massively in the HR and also in the real estate to improve the living conditions for the residents, but also the caretakers, as you said.
So and maybe Steven, also from your advisory service point of view, when you look at deal flow, I think COVID has an enormous impact, of course. What's your observation in terms of deal flow and investments? Is there still a momentum, or?
Yeah, I mean, I don't think the appetite for the sector diminished during COVID. I think that it's a macro-driven story. I think COVID is a pause in that, but I mean, I don't think anything more than that. We see investors looking to diversify, continue to diversify. So, no, look, I think in terms of investment volumes, they've held up better than some of the other asset classes. I think probably as expected. And I think it's really only limited by supply at the moment. And I think that a lot of investors are actually getting into the funding game because in order to expand this market, we have to build the stock. That's clearly the thing that you need to do. But in terms of demand, there hasn't been a let up in demand.
Yeah, maybe Frederick, I see you agree with Steven. You've been an operator yourself. In terms of the fundamentals of demand, could you elaborate maybe on what are the fundamentals of senior housing and healthcare markets, and also in terms of the investor's perspective? Where is where's the trust, and also what are the fundamental drivers who boost the investment market?
Well, on the demand side, I think demographics is clearly, the key driver. And as you may know, we are really at the beginning of that. People entering these facilities today have, on average between 83, 85 years old. So, it's really, we are still pre-boom generation. So the growth is ahead of us. And I think through this pandemic, shifting on towards the investor demand, I think people have realized, how critical, these facilities were, and that there was going to be a, continued investment from public authorities, and that again, people have realized that, demographics is. They should have realized maybe earlier, but that demographics is really an amazing driver. And as was mentioned, I think there is this market is relatively large from a volume perspective, around 8 to 9 billion invested from an institutional investor perspective in Europe. It's not huge compared to the size of the rest of the real estate market. And any small shift, from diversification away from real estate, from office, away a little bit from retail as well, has a huge impact on the healthcare space, as it has on logistics, and it has a push on pricing. And as you mentioned as well, Ron, I think ESG, as we can see it also from the number of conferences that are on the theme in here, is a key aspect, and is on the forefront of investors' minds. And this sector, on top of everything that was said, has a number of features that are also quite attractive from that perspective.
Great. Yeah, maybe a question to Nicolai or Sabine, because I think Charles Antoine also highlighted the geographical spread, and also which countries or regions are investable next. Whether do you agree that Baltics, CEE, or maybe even Mediterranean markets, are those the investable regions after the mature markets? What's your opinion, Nikolai?
So far, we do invest, or we mainly focus on Germany and France in our investment strategy. But we try to expand, especially in the Nordics, in the Netherlands, and in Austria. But that's not so easy for us because the markets are very fragmented. The markets are the investment volumes are quite lower than in Germany or in France. And we have to cope with the special regulations, with the terms of refinancing, the rent, etc. So we are improving on it, but we have to move on and look what the future brings. So right now our focus is on Germany and France.
And Sabine, maybe also from your perspective, what's the geographical observation? What's next?
Yeah, I agree. We at Principal also invested in Germany so far. Maybe you can look at Austria or the Netherlands at next. But as Nico said, it's not so easy. At the end, you need a local expertise. You can't do that from very far away because regulation is so different, even in the different country as well within Germany. Federal state in Germany, everybody has its own regulation. And when you look at other countries, it's even more different. So it's not so easy to look at other countries, and you ever need to have a partner, a local partner, with a special expertise.
Yeah, that's great. Maybe also Sylvia, it would be nice when we can have some questions from the audience, so feel free to raise your finger. Maybe one question also to Charles-Antoine again, because you were also highlighting the more sustainability perspective. Is it only real estate driven, or is there also a benefit for the operator?
I think there's a benefit for everyone, for the operator, but also for the residents in terms of quality of real estate. And if we look at it and compare over the years what has happened, certainly in Belgium, we've seen like 10 years ago, operators were growing very fastly, and they wanted to have new buildings as quickly as possible to be able to get a hold of the market. And depending on the operators, but some were focusing a bit less than others on energy and efficiency and things like that. They also didn't really see the positive side of that in their P&L. And now we're also starting to implement new energy improvement strategies on existing buildings in partnership with those operators, and we make those investments yielding, because we can also show that it's improving the whole business case of the operator. So it's a win-win for everyone.
And do you also see it on the valuation side? Because investing is always a question, where is the benefit?
I think on the valuation side, probably today's market is very hot. So maybe we don't really see the big differences yet, but I think over time it will evolve. There's such a high focus also from investors behind players like Adifica, who really want to focus on ESG and energy efficiency. I think it will play a bigger role in the future, and you will start seeing more discrepancy between yields on efficient buildings and less efficient buildings, both energetically but also, of course, operationally. Future-proof buildings or non-future-proof buildings. Yeah.
And from your perspective, Benjamin, when you look at the Paris Agreement and also the way to reduce the carbon dioxide, CSR, ESG, impact investing, how important is it for your company?
Very important indeed. We also committed ourselves to reduce our CO2 emission by 40% over 10 years and the energy consumption by 30%, which means a lot of work on existing buildings, which are, for some of them, very old, in our portfolio at least, and a huge effort on the greenfield side, on the new builds. So we systematically try to get certification for our new buildings to only build energy efficient buildings using the latest technology for that and alternative and renewable sources of energy. And it's a good prospect for us as an operator, to, of course, because we can save the energy bill at the end of the day. We have a quite direct return on investment, but the first intention is not financial. It's this commitment to the environment, which we do take seriously as operator.
Okay. So also looking at the audience, so feel free. So just highlight, yeah, over there. So maybe Sylvia, you can take one of the microphones, the flexible one. Oh, Benjamin. It's always nice to introduce yourself shortly and then ask the question. Thank you.
Simon Wallace, DWS. You mentioned briefly about regulation and the challenges around that. Just can we expand upon that a little bit? What is the regulatory environment like at the moment? Is it stable? Are you seeing a lot of changes there? Do you expect more changes to come? You know, how much of a challenge is, and do you expect regulation to be going forward?
And in a specific country or in an asset class like nursing homes?
The asset class and the markets you're operating in, I guess.
And it's a question to Nikolai. Yeah, Nikolai is...
It's mentioned it.
Yeah.
Yeah, at the moment it's in Germany that every federal state has its own regulation, and of course there's always a risk that we will have a change, especially on a single ratio bed or room issues like that. But I think at the moment I don't expect, from my point of view, don't expect any big changes, but maybe Benjamin, as our operator, can...
He has no microphone, so...
Add something on that, because...
Yeah, no, so I see Frederick, you would like to come on? Yeah, feel free.
You asked evolution of the regulatory constraints.
Yeah.
How do we expect them to evolve?
I think the question was, do you expect any changes or in the wider future on regulations which hits your operations?
Not really. I think we had the worst behind us in Bavaria and Baden-Württemberg and NRW, which are the three biggest federal states also in Germany, the most populous, the older ones, and the wealthiest also. So that's where the operations very important to secure. But we have a lot of federal states on the eastern Germany which still do not have put in place such hard regulations on single beds, single room ratio, etc. And we don't expect them to come too early, and if they come, they usually give us exemption periods. So 10 years, or sometimes we can, as an operator, argue that they need to wait until the end of our lease agreement to push the problem to the landlord at the end of the lease. No, but to answer your question, the worst is behind us. We still are in negotiation in Bavaria on some nursing homes because the authorities are really slow also to decide.
Yeah.
But it's quite a negotiation, sorry. It's fortunately a negotiation on the local basis, and we have teams that are doing that on a daily basis, full time. So we invest also in the HR to cope with this.
Yeah, I think it's a very relevant question. Maybe Frederick, you could like to contribute?
Yeah, I mean, we've talked about Germany, and I think it's the same at the European level. You know, you have lenders that are more advanced, or they have sort of come with new regulations, and some other lenders no, because they don't have the same issues. There are a number of considerations that in Eastern Europe, part of Germany, you can't go maybe as strict as NRW in the percentage of double rooms, single rooms, etc. And you have the same at the European level. The norm in Italy, it's accepted for the time being. You have to have double rooms. It used to be not very long ago. You had triple, quadruple rooms. It comes from a affordability also element. So yes, you will have. I mean, regulation is part of our business. It is also sometimes. Most cases, I think it's. Of course, you have issues, but it's an opportunity as well. It pushes some operators or some operators out of the market. It creates liquidity, new entrants, etc. Consolidation, it's going to be evolving all the time. and I forgot what I wanted to say, but yeah, it's different really from country to country, and you have to take that into account. Yeah, what I wanted to say is that it's normally, I know that normally regulation is a big word, particularly for investor, but actually I think that in this sector in particular, it has helped operators improve because it's really looking at it from the perspective of the resident and trying to protect him because he's not, and it has helped the operators to professionalize, pushing the bad operators out of the market, so yeah, it's a common feature that we have to accept, and as you were saying, that's why also when you have local partners to understand that they understand these aspects, it's quite important to be able to invest in the sector.
Yeah, and I think
it
shows how important it is that you know the asset class and that you have the knowledge about it, and that you know that there are different regulations, and then you know that you need to go and exchange with the operator, and that you have a good relationship with him. And I think that this makes this asset class so special. Yeah.
Yeah, maybe also a question to you, Stephen. From your CBRE point of view, when you look at, I think the risk analysis is very important, but also the demand to have some sort of a benchmark. I'm also curious from your CBRE point of view, where are we now? Like, are we able to set the standard, or is there in terms of diversification, too much spread between sub-asset classes and countries? What's your opinion about the benchmarking perspective?
Well, I mean, I think that the institutional capital that we're working with really are targeting working with the best-in-class operators. And I think, as we've already discussed, those standards are relatively clear and consistent. So I think from a capital perspective, having access to the best-in-class operators is a prerequisite, I would say. Reputational risk is a concern, and it's a key consideration. So I think that, as Frederick has already said, the lower part of that operator spectrum have been forced out of the market. They can't operate efficiently or effectively. So I think we are seeing, it's pulling everything up. And yeah, from the capital perspective, accessing that operational excellence is an absolute prerequisite.
Yeah. And maybe a question also to you, Charles, because you were highlighting also, well, let's call it the involvement or maturity of working together between the operator and investor, and also, well, renegotiate leasing terms or at least leasing agreements. And then I saw Benjamin was, you're referring to lease agreements and the length. So what's next? Are we going to shorter leases? And or, for example, from a senior housing perspective, will it go to individual leases, or is it still a master lease product?
I think, well, it's a hot topic, as I mentioned. In the past, everything was, quite clear. This sector was only talking about very long-term lease agreements, and basically, why was it necessary? Because we're talking about also very specific buildings, not so flexible buildings. And in some countries, like for instance Belgium and France, the whole business is based on a licensing system, so a limited number of beds. So you want to, both from an operator perspective and from an investor perspective, you want to make sure that it's a very long-term partnership that you're setting up there in that specific building. Now we see that we're getting more and more questions about shorter lease agreements, partially based also on accounting rules, IFRS 16. Maybe not always based on that. That's also a discussion to be had. But in our opinion, we really should remain to those long-term lease agreements, certainly for specific buildings. So if you're evolving more towards senior housing, you're coming much closer to residential, and then you have a much more flexible building, which could also allow for shorter lease agreements. Because if the operator decides to leave after 5 or 10 years, you have something to do with the building. Whereas if you're working on a very, very specific high acuity care home, it might be a different story, also depending on location in that sense. So it's an interesting discussion that we're having, and sometimes we try also to have that discussion with operators and saying, okay, but you want to reduce the lease duration for, let's say, from 25 to 15 years, but you want to keep the option to prolong. Maybe if we go to the other extreme, theoretically, and we sign 5-year lease agreements without prolongation, and we organize a tender after 5 years to maybe replace the operator. That's completely the opposite. And then you get a real estate market, which maybe is also not a good thing for the market, but that's maybe the risk that we're going to enter into if we go to the other extreme.
Yeah, maybe additional, Stephen, regarding the, let's call it residential senior market. Do you think it evolves to an individual lease with a consumer like a senior, or is it still a mass lease product?
No, I mean, I think that the further up the care curve you go, the more important those long leases are, and the wrapper from the operator. I think yeah, the more it gets to a residential product, then clearly, you move more towards the way the residential market works.
Yeah. Now, so maybe in the next 5 or 10 years, also from your UK perspective, what are the latest trends? Do you see indeed some sort of a retirement care sub-asset class next to a nursing home asset class?
Yeah, I mean, we see a lot of, again, the demographics are hard to ignore. It's a macro trend that investors are following. I think that there is a very, very low provision of senior or housing adapted to senior living. It's under 4% in the UK of the housing stock. So I think that, look, I think the statistics are that between now and 2050, we're going to have 50% more over 65s and 100% more over 85s. So look, I think that the product needs to adapt to that situation. So we will need to see more senior living adapted to a more mature customer.
Yeah. Yeah, maybe,
and we're seeing, I mean, again, I think that it's not that complicated, actually. It's just about a greater level of amenities and a sort of a move towards the sort of hotelification of residential would be a word that's been used before. So yeah, I think we're seeing that in some of the senior trends in the UK, but also in other countries.
Yeah, so you see more senior residences combined with hospitality concepts, etc.
Amenities that you would expect to find in a sort of.
And maybe Frederick, because you were an operator yourself, and when you look more at the nursing home perspective, what kind of state-of-the-art concepts do you see? You're originally from France. I know you spoke before about EHPAD du futur, the nursing homes of the future. Maybe it's interesting to give some insights about what's next in terms of concepts for nursing homes. Feel free.
Well, for France, it's actually a bit hard because, as you know, there is, for the time being, and for I think the 2-3 years at least to come, no new bed creation or very little. So I think that prevents, potentially operators to really create new concepts. So I think what they are doing is really trying to it's a little bit outside of the nursing home space that is quite regulated in France, and towards maybe, I think the overall trend is home care. People want to go there. They want to remain, at home. This is what the population wants. This is what the legislator wants. Of course, you can't always do it because there is a certain level of dependency where you can't remain at home. But I think what people like Corian and maybe Benjamin can elaborate on their one of their activity, but is maybe going towards the smaller size unit environment that is maybe easier it's easier in such an environment to cater for people. Then of course you have regulation again. So for instance, in France, you can only do sort of co-living for relatively, I mean, still dependent, but fragile people, up to homes of 8. So they have a concept where they put 2 homes of 8 people each, so that's 16. In a single environment.
And is this small ticket also aligned with the investors' appetite, because they like big tickets?
Well,
so
they like big tickets, and so sometimes you have large groups that have a lot of developments, and so you compensate the small size by the size of the pipeline, and so you build partnerships. In Germany, this same concept, you could go as high as 35. Units. So that's slightly larger.
Yeah, maybe we'll switch to the German players. I think they have some valuable insights. Feel free to elaborate on new concepts, especially on Pflegeheim, or maybe also community ways of living together as seniors.
So right now we do see a shift to assisted living because you don't need so much qualified personnel. And the elderly people do have the opportunity to choose their own flat, to choose their own services in terms of meals, housekeeping, and care services. But on the other hand, I think in the future it could be a mix of full inpatient care, mixed use. A building of full inpatient care and assisted living, because for the elderly people it's very important to stay at one location, so they can move in when they are not too strongly in need of care. They can choose their own flat, etc. And when it's getting worse, they can stay at the location. Perhaps they have to move in another room or in the full inpatient care sector. But they can stay at this location with the staff, etc. They are used to it, and I think that could be one part of the future hospitality.
Okay, great. I'm also looking at the audience again, so if there's any question, feel free to highlight, and I will give you a microphone. And also, in terms of timing, I'm still curious about, well, maybe the future and also the perspective. And Sabine, so to your opinion, from your scope, what's next? So are we also going to invest in the cure side? For example, hospitals, medical office buildings, or will it be more mixed use? Or is it also that the seniors will be more inclusive in the neighborhoods? So more area developments where we see inclusivity concepts. What's next to your opinion?
Yeah. I agree to Nico that we will have more diversified care facilities. I think that's next, and there will be a mix of probably dementia care. There will be inpatient, outpatient care. I think it will be also a chance for the elder people that they will live in a community, that they will do activities together, that they will have like having a drink of coffee with a neighbor. So there will be a chance for them to have a great facility and with a great community. That's what we see on the, let's say, care facility side. And beside that, I also see that there will be more look on medical centers from an investor's point of view, as well as on probably rare clinics when there would be a chance and when it would be a location which is fine and with a good operator. Yes, what we've already heard, there is a high demand on the healthcare sector, and we have probably less products, and so we will look on different point of views.
Yeah, maybe also a question, because Nicola, you were also highlighting the scarcity of care workers. Do you think technology will add some value, like wearables, the GP behind his iPad? Is there any technology who could help us to become future-proof?
Perhaps in some aspect, yes, it could help. But on the other hand, I think caring older people is very personally. So I think that we always need a lot of people for this business who are in the facility and who are speaking to the inhabitants, who are caring of them. And yeah, it's a very individual thing. And what's been already said, I think one of the most challenging points in the future, especially in Germany, but I think in France it would be the same situation, is the availability of staff, of qualified personnel to cope with the needs or yeah, what we need because of the demographic development. We have more and more older people, and we need to cope with it, and it would be very, very, very difficult in this actual situation and also in the future because we have too less personnel.
Yeah, then maybe it's quite logical to go to Benjamin because I think it's relevant when you look at the care workers' perspective. So how are you coping with it? Are you focusing on education or being an attractive employee? What are you doing at the moment?
Yes, we give our best to improve the qualification of our personnel, to propose more trainings on the work, to invest in their living and working conditions, renovating offices and enlarging and enlightening it, and also improving the certification. Also, we move forward on the ISO 9001 certification, which also has some good advantage for the employee because they feel a better structure and process and organization at work, which follows a very logical and qualitatively high ambition. So that's one of the way, and try in Germany specifically to improve our Atsubi, so the apprenticeship, I think, to get a little bit more of this internal personal resources on our own by qualifying very young people and also from abroad. Yeah.
And maybe Frederick, because you're working in several countries, from Ireland to Netherlands, etc. What's your view on the operational side? Is it really one of the hot topics? So not bricks, but personnel?
Personnel is very key. I mean, I think Germany is really the hardest market for this issue. France follows after that. You have some markets where maybe because of the funding system and so the level of wages in this sector compared to maybe the public sector like Ireland, where it is less of an issue at least. Of course, then you always have micro sort of conditions. So some markets are more available. I mean, where you have more stuff because you have maybe more affordable residential homes, etc., so that staff can live there. In the larger cities, this is a big issue. So it really depends. Again, but really the key two markets where it's really an issue are France and Germany.
Yeah, great. Yeah, so I'm also looking again to the audience. Is there any questions? So feel free. Yeah, maybe Sylvia, my lovely PA. We can use the microphone of Nikolai or... great. Please introduce yourself briefly and then ask the question.
Hello, my name is Katya Pazelska. I work for Blutagus and I'm based in Portugal. Okay. So my question to you, well, you mentioned a lot of geographies where you're operating, where your historically maybe operations are, such as Germany, Netherlands, and so forth. My question is, are you ready to consider other geographies to make more diversification? And why I'm mentioning this, for instance, if you look currently in Portugal, you will see that a lot of issues you have mentioned are not an issues over there. So first of all, speaking about labor costs, I would say that your whole operation becomes more efficient. There is a lot of availability of high quality nursing personnel. So Portugal is even exporting this kind of resources to UK and other countries, but Portugal is historically known for very educated nursing staff. And another, I think, very big benefit is the mild climate, and this kind of product is not only attractive to local target group, and by the way, demographically, it's the country with one of the oldest populations in Europe, but we also observe right now so-called senior tourism. So these are pensioners in advanced age coming from northern countries who would like to spend this period of their life in a more mild climate, enjoying more sun, enjoying this kind of benefits. So,
yeah, great question. Yeah, maybe because I think senior tourism, or we see much more senior expats, so Mediterranean markets, and I think it was a great elevator pitch for Portugal. So, yeah, feel free. Who would like to take this one? Like Portugal, is it investable next, or why not?
I'm happy
Frederick.
to take this one. Of course, Portugal is a market. It has an aging population, etc. I think maybe just two elements, maybe others, but I mean, you have an affordability issue or capacity from the residents to be able to pay for this. Of course, wages are maybe lower than in other European countries, but you still have, if we're talking new build, you would have an issue because land prices in Portugal has gone up significantly. Construction costs are what they are, and when you add, and then of course you need to pay for service, and you don't have any. I mean, the subsidy or the pension level for locals is not. At least the math are a bit difficult to make the two meet. But there is a market, and as usual, maybe operators are coming. Orpea has been building a number of nursing homes, and there's still a pipeline. Operators like Domitis are going into Portugal on the senior living, but they're betting on the foreign population. That is a bet, frankly, and it will be interesting to see how it develops. Because again, referring to what Ron was saying, as I maybe mentioned before, we're not talking about people who are 65, retired, and want to have spend good time in a nice environment. We're talking people who are maybe 80, 85, and who are feeling some frailty in their life because they have maybe lost their partner, or maybe they are post-operation, and there are things that they can't do anymore. And so when you are at this level of frailty, and particularly when you have your family, your children are becoming a bit more concerned about your well-being, normally there is a sort of return towards, people have maybe moved towards Portugal, Morocco, Tunisia, anything, Spain, between 65 and 85. But maybe at that point, at least that's what I believe, but they go back to, to be closer maybe to their children. They go back to an environment where they feel that they can communicate, or they need security and safety, and they need to feel in an environment where also the access to the health system is near, even if they don't want to think about it. Yeah, but it's a health system that they need to trust, and of course if they are not from there, so I think it's a bet. But yeah, maybe these two elements to your question.
Yeah, I think excellent answer. And maybe also from the investor perspective, do you agree with Frederick? Because we see a lot of short stay business cases, or indeed geographical, like Cyprus, Greece, Portugal. Is it on your list? Because we saw your geographical breakdown, but why not Portugal?
I quite agree. We talked about Southern Europe. It's also on our list, of course, Spain and Portugal, Italy, let's say. But in our philosophy, when we go to a country, It's to develop product for the local market there. And maybe once we are very well established in that country, we could maybe as an add-on do a test case with such a residence for expats, let's say, because we know from experience, also from talking with our partner operators, that people tend to go to nursing homes either where they have lived their whole life or close to their relatives. And so it could be expected that people who move to the sun would go back home for the nursing and care if needed when they're very old. So it's on the list, but we need to see the potential to be there, but for the local market and not so much the expat.
Yeah, I think it's perfect. It's aligned also with the Senior Housing and Healthcare Association. It's like trying to elaborate on the knowledge side and also make crossovers from countries. So thank you for your question. I'm looking to the audience. Is there any final question? Otherwise, I would like to go to the panel because I think we have really a first-class panel with thought leaders geographically or more on asset class. Maybe a final thought in terms of a key takeaway and an advice. And maybe Nikolai, what's your advice to the audience in a one-liner?
So I have to say that we definitely need more product. We need more senior housing. We need more full and patient care, everything in Germany, but in whole Europe, I think. The main challenge, as I already said, will be the availability of personnel, of qualified personnel. And on the other hand, we can see that the investors' hunger is really, really strong. We have new players which arose during COVID because they saw that this asset class is very resilient against COVID and such events. And so I hope that it will be possible to have some kind of incentives for project developers, etc., to build new care facilities, because we really need it, not only the investors, but also the people who are in the need of care, also in the future.
Great. And Sabine, based on your experience, what's your advice to the audience?
I think healthcare will be an interesting asset class that will in the future. And of course, there are some challenges. I agree. We are looking for good investments, which is we have a high demand on products, and so as I already said, we are looking for diversified care facilities, and hopefully, and that is probably a wish, we will get some support from the regulation side, because also with the support of the governance, we would be able to create new new care facilities, and the operators would be even able to create more locations and more products on that. And I think transparency would be good for the healthcare market as well. And of course, in a good change and a good relation and partnership between investments, between operators, and what we can already see here on the panel, I think that would be good for the future, and looking forward.
Excellent, excellent. And your energy is good, so perfect. Frederick.
Well, I guess the one-liners is clearly a lot of growth, a lot of needs. A sector that is full of purpose, and it's really, meeting societal sort of need. So I think all good things from the investor side. Just as the risk is that, as usual, when you have a lot of new money coming into a market, is that, you stop really making a difference between the good product and maybe not as good product, because you have pressure on being able to on sourcing, and so hoping that this is not going to deter that investors will not make mistakes that will in the future deter further investment into the sector. So just beware that the sector is great, but you have to make sure you understand where you're putting your money.
Great, thanks. Steven.
Look, I'm very excited for the sector. I think there's a lot of capital coming in now. I think you've got an established set of professional operators, developers, asset managers. We're working very hard to match that to the capital. And I think that, we see that, when the product is there, the capital follows. So, it's a matrix that is building and it's working through. But I think that there are great push and pull sort of stories behind all this capital coming into the sector now. I think, diversification for investors, and I think the pull is that you get stable income and you've got a growing marketplace.
Yeah, correct. Yeah, and Benjamin, I think talking about operations, scarcity in personnel. So what's your advice to all these, let's call it investment managers or real estate chain? I
would say to further support us in developing, I think, what we consider as future-proof care developments, which would include not only nursing homes, but also assisted living, care communities, daycare units. We need to create mixed ambulatory platforms to survive the next decades and to perform and meet the demand and take care of those residents over the last 10 years of their life, maybe, if we are good. It's possible, it's already proven, but we need to further invest a lot of money into this real estate development. And we are happy to operate such a platform and using investors' capital for that. But we like to put our money also on the table as an operator and partner with our investors.
Great. Yeah, maybe some final thoughts, because you had an impressive keynote, so thank you. So also when you maybe review this session, what's your key takeaway, to your opinion?
But I think also a very important item that has been mentioned also during the panel is that it's a market with a lot of potential throughout Europe, but it remains a very local market with local regulation, local habits and cultures and local concepts. So if you want to grow internationally, you need to be doing that based on very strong and professional local teams that know the markets. And you need to diversify, but you also need then and it's an opportunity to share experiences and to try to maybe import and export concepts from one country to the other, if it works on all aspects, of course. But
great. Yeah, well, I think it's also relevant to say thank you for the online audience, and then a big applause to the expert panel, because I think it was a relevant discussion. So thank you. Sylvia will be here from the SHA. So and after this, we're having a meeting on impact investing and ESG. So that's in the end also a very relevant topic. And then we're having some drinks. So you're all invited to be present during the drinks at 6. So thank you and have a nice Expo Real. Thank you.